Welcome to The Retirement Architect. My name is Cynthia Defazio, and I'm joined today by David Reyes. And David is founder and chief financial architect of Reyes Financial Architecture. David, it's great to see you again.
How are you?
I am doing fantastic. Thank you so much. And so much has been happening since we started, obviously, with the television shows, and you've been just so extremely busy. I know consultations have been booked, and I'm so thankful that you take time to do the shows each week.
No, I appreciate you being here. So it'll be a little harder on my own. Radio is not as fun. This is more fun. I love radio. Don't get me wrong, but I get to actually talk to another human being. So no, it's great. We love the feedback and just again love the opportunity to be able to talk to people directly and have that opportunity. It's fun.
Absolutely.
So I really appreciate it.
Oh, good. I'm so glad, David. And I love being here with you as well. And it's so important to talk about how important it is to not only have a retirement plan, if you will, but also you stress in a retirement income plan, because there is a little bit of a difference, correct?
Yeah, I would argue that most folks don't have a retirement plan at all. You know, the retirement plan is their 401k plan that they picked, 25 years ago, what the mutual funds were, or they have an advisor that maybe has picked a basket of stocks and bonds and those those types of things. We have to be able to convert that money into lifetime income. That's what it's all about. The number one concern people have is running out of money.
Sure.
And if we're looking at income, it's a different conversation than just looking at growing capital.
Sure.
And so we want to have, I always say, we want to have the most amount of income with the least amount of risk and never run out of money. The most amount of income, the least amount of risk and never run out of money, because that's what it's about. And how you construct a portfolio, with that objective in mind, with that that's my job, that's a different strategy than I want to grow my assets and have more volatility otherwise. So what we want to do is you want to have an income plan. You want to have a written retirement income plan. Here's what it is. Here's in writing how much I have. I have $1 million. I need $50,000 a year for my investments. How am I going to get that 5% distribution rate with taxes, inflation, the potential for long-term care costs, stock market risk? It's a lot, especially if you're on the same team as your client.
Yeah.
Right? I've never, thank God bless, I've never had a client have to re-retire. Yeah. Meaning I've never had a client go through 08 or go through this COVID crash. I had clients come to me that had to go back to work.
Yeah.
I had a client that lost 50% of their portfolio at 70 years old.
Wow.
We're talking millions of dollars.
Sure.
It was a big, and they had to sell houses. It was a fire sale. And so thank God I've never had that situation happen, because if you focus on cash flow, you focus on managing risk, you're going to have a different outcome. Hopefully, that's the key.
Yeah.
Look, I've done this a long time, 25 years, so I've been where people haven't, been. We have our slogan of our firm is, you retire once, we retire every day.
I love that.
And I came up with that because that's a reality.
Yeah, absolutely.
Right? I can have more confidence maybe than a person has across the desk from me when they first meet me about what we do, because we've done it for so long. And it feels good. And when you're taught, you're like, whoa, great, that worked, right?
Yeah.
I was basically mentored by some people a lot smarter than me. And so everything I've been taught, we've just built upon, and hopefully you get better over time.
Sure.
But everybody has to have a written retirement plan. And again, very few people have it. And most clients' plan is what their investments are. And an investment plan is not a retirement income plan.
Yeah, totally different.
Yep.
And I love your book, by the way. We have not talked about this in a little while, but Mama's Secret Recipe for Retirement Success. Yes. This is fantastic. And in this book, you actually have the 7 rules to live by in retirement. I want to talk to you about that today, actually, because, and I want to brag on you a little bit. This is not only a great book, but it's also an Amazon best-selling book. So you're also a very accomplished author. So you're very humble about that. You're kind of blushing a little.
Well, we're proud. I love to write. We've been blessed to be able to a lot of projects we've been invited to do. We're going to be doing our next book called Diversification.
Okay.
It's kind of play on words on diversification.
Yeah,
because
absolutely.
I think it's a misnomer. And so that book will be out in 2021.
Okay.
So I'm excited about that new book. It'll be a smaller book. But yeah, that's been a great book.
Yeah.
One of the chapters on there, we talk about the 7 rules for retirement security, and I'll go through a couple of them. And the number 1 is avoid large losses.
Okay.
Which sounds kind of duh. We want we don't want to lose a lot of money, but when I look at a portfolio and I evaluate it, and you have risk of 20-30%. And I say, look, ma'am, you need, we only need a 5% rate of return to retire, but you have 30% potential losses in here, and you went through the COVID crash, you went through 08, and how did it make you feel? So avoiding large losses, number one, minimizing fees. The average mutual fund, according to Barron's, is about 3% cost. So one of the things we do in our risk assessments is in our second opinions, we look at the risk of the client that they're taking in their portfolio, we look at the fees that they're paying. So we actually have software that'll break down the actual expenses that you're paying inside your investments. I don't know anybody who does that. And so we're going to reduce clients' fees. I want them to pay the least amount of money to be able to execute their plan. So if I can save them money, I can reduce their risk, reduce their tax. I want to earn a reasonable rate of return. We don't need to earn, try to earn 10%. If we can earn a 5-6% rate of return consistently without having large losses, we lose 50% of the portfolio, we need 100% to get back to even. You lose 35%, you need 50% plus to get back to even. So the fact is we want to do that. We want to also, number 5, control and manage taxation. Taxes are a big key component. And we want to create what we call certain income is rule number 6, not maybe income. Maybe income is I have a bunch of stocks and mutual funds in my portfolio, and maybe it's fine until the market crashes, then it's not. We want certain income. So we want to create lifetime income strategies inside of our planning. And then 7 is have a written plan. So we want to reduce risk. We want to keep in that 5 to 10% rule, meaning we don't want to really have losses of any more than around 10% at any one time. I'm talking when the worst crash happens, we want to stay in that 10% maximum drawdown level. So we build the portfolios for that. We want to mitigate taxes. We want to reduce fees in a portfolio. We want to create certain income. We want to have a written plan, and so that's a lot. So when we say we're doing reviews for clients, these are serious. I used to charge thousands of dollars to do these for clients because there's something you can have it as yours if you go through our second opinion process. But the fact is that to do this on your own, I think is just difficult. It just is. I've used the saying before. We're with the internet. We're drowning in information and starving for wisdom. I'm stealing that from somebody. I didn't make that up. It's true. But it is. And we all face that with whatever we're researching, and in the end, we're like, who's the best at that, right? Who's the person that I can pick up the phone? Oh, I want to call that guy, right, or that doctor, or that whatever that is, and so we just want to have the opportunity, to sit in front of somebody and say, hey, here's what we would do, and it happens by osmosis. If we're going to have a client, it's like a relationship. You don't like, that person, is going to be the person I'm going to marry or whatever that is. That relationship happens naturally, hopefully. And so it's easy. It's not a forced situation. We both have to feel comfortable in that situation because it's a commitment. It's a commitment. So it's fun. And so the 7 rules to live by with retirement security has always been kind of a cornerstone. It's over the years of how we've watched what we've done, what other people have, and if you follow that, reduce volatility, create lifetime income streams, you reduce taxes, you have a roadmap to what you're doing. It takes away all the stress.
Absolutely.
And you're not worried. You can revert back to it. When we do reviews with the clients, what do? We revert back to the plan. It's up on the board. Here's what we said we're going to do. Are we on track? Yes. Okay. I can't recall the last time we weren't on track. It just doesn't happen. There has to be some exogenous event that's outside of control of life. I'm not even talking about the stock market. I'm talking about maybe other things. Somebody passed away, or I had one client that had to help take care of her brother's family, and that caused stress on the assets, something like that. But you have to have a written plan or roadmap to be able to go back and measure how you're doing.
Absolutely.
So it's important.
Absolutely. Well, David, we're about ready to open up the phone lines for the very first time this week. Do you want to tell the viewing audience what they can expect to receive? Sure. So what we do for all I do for all my radio show listeners for last 15 years. Now we're offering it for television for the first time, which I'm excited about. So for the first 10 callers, if you have $500,000 or more, we'll do a complimentary second opinion, a retirement review. We'll review your taxes. We have our own, we work with CPAs. My partner's a CPA. We'll look at your trust, your estate plan. We have our own in-house estate plan attorney. I'll look at the fees that you're paying inside of your investments. Most of you are overpaying in fees. If you have mutual funds, they're expensive. We'll look at, the risk you're taking on in the portfolio. A complimentary second opinion review. So the first 10 callers that want to call us at our Reyes plan, phone number 866-739-3775. Again, that's 866 Reyes plan. You can go to our website as well, which is at reyesplan.com. And again, it's first 10 callers, and I'd love to talk with you, and hopefully we can help you. David, thank you so much. To the viewers at home, the phones are now open. That number to call is 866-739-3775. We realized in the past the phone lines have been busy, so we've added the additional phone line for your convenience this week. Again, the number to call is 866-739-3775. We know you have a lot of questions about how to retire with confidence and comfortably. David has the answers for you. We'll be right back after this very short commercial break.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
And welcome back to The Retirement Architect. My name is Cynthia Defazio, and I'm joined today by David Reyes. And David is founder and chief financial architect of Reyes Financial Architecture. David, I love going to commercial break and seeing the phone lines light up because I know that there's such an interest and a demand, if you will, for knowledge, which is what you're giving the viewing audience. People have so many questions about how to retire comfortably and peacefully and have enough money to live on during retirement. So anyway, I love seeing the phone lines go crazy like they were before we went to the break. On this segment, though, I want to talk to you a little bit about RMDs, required minimum distributions. Have there been any changes with those lately, and can you share what that would be? Yeah, so the change this last year has been that if you're not 70.5 this year, then you can wait to 72, which is a big deal because it does a couple things. Number one is when you take out required minimum distributions, a lot of folks don't know what that is. What's a required minimum distribution? Well, it's a table the IRS created to basically get your money, so you have to pay taxes. Okay. So you have to start taking a certain percentage of distributions, 3 or 4 or 5% in the beginning years of your value of your, so if you have $1 million IRA, you may have to take out $30,000 a year, $40,000 a year. So it's kind of forced taxation because you may not need all that money. You may need more than that. But the nice part about now moving the RMDs now to age 72, it gives a chance for clients to defer tax, but also maybe do some tax planning as well. Maybe take those monies that they would have taken out as a distribution, and maybe just now convert those to tax-free accounts. Okay. We had to pay tax on it anyway. Let's move it now to a Roth IRA. To now where we pay the tax today, but now we can have those monies grow tax-free compounded for the rest of our lives, avoid estate tax, avoid any taxation to the beneficiaries. So I think what it does for me is it highlights the need to evaluate taxation in retirement distribution planning. You know, as a rule, we want to, over a 5-year period, our goal is to reduce or eliminate 30 to 50% of the taxes on the distributions from our clients' accounts by doing some proactive strategies to reposition assets into more tax-favorable types of investment strategies. And that's something that we're very, very focused on. We believe taxes will be higher in the future. Sure. So we're very meticulous about it, working with our CPAs and saying, what are the brackets that we want to pay taxes in today that we know are what the tax are going to be instead of paying some unknown tax in the future. Especially because it will give us the tax-free income. On top of that, it will go to our beneficiaries on a tax-free basis because most folks are just not aware that the tax that's going to be paid on their IRA accounts. You know, you're talking 30, sure. 40, 50% taxes
on the inheritance, so that inheritance tax. And so if we can proactively mitigate that, generally can't eliminate it, but if we can cut it in half or even by 30%, why not?
Yeah.
For our own benefit, and then also for the benefit of our children. So I mean, I have 3 kids, and taxation is part of asset protection to me.
Sure.
I want to protect those assets for my kids.
Sure.
And so part of that is the attack of taxes. And I think with what's happened in 2020 with COVID and the budget deficit, taxes and inflation are going to be a major attack on our portfolios, on clients' portfolios, and we need to make sure we're proactive about managing that risk and ensuring that we don't have that problem in retirement.
That's a very important topic to actually hone in on, would be inflation, because obviously we know the cost of living is going to go up. It's been going up for years.
Yeah.
But a lot of people fail to plan for inflation,
Yeah.
but you take that into account. So tell me, why is there a difference with the way that you strategize?
Well, I will tell you, and I've talked about this before my radio show and here on the new television show we have, that I wasn't, we haven't had real inflation for 20 years. We haven't had inflation really since the 90s. And so, which was the heyday. I mean, back in the 90s, you had interest rates were 4 or 5%. The stock market averaged 20. Think about that. I mean, back in the 90s, you're basically your money doubled every 5 years. You know what I mean? Every 4 years, basically.
Yeah.
And so that was the Goldilocks period of a stock and bond portfolio that today is probably projected to earn about 3.5% according to JP Morgan. Going forward, a balanced portfolio of stocks and bonds will net you about a 3.5% net rate of return. That's before mutual fund costs, before advisor fees, before inflation, before taxes. So I could argue it's basically almost no return. So you have to look at inflation. I'm concerned about it today because of what's happened with our government and with all the borrowing we've done. There's going to be now a price to pay.
Sure.
So there's things that we can do. Back in the 70s, I think it was between 71 to 81, you had inflation running around 13%. Crazy. And now we're around 2, a little less than 2. Even projecting a 3.5% inflation rate, which historically is around, I think, 3 over our history.
Okay.
Which is still 50% more, than what we're paying now.
Right.
The problem is if you start factoring that in and you don't have a plan, you're going to run out of money.
Yeah,
run
absolutely.
out of purchasing power.
Absolutely.
So I think inflation and low interest rates are the biggest attacks on portfolios. So we need to build things in. We want to own, we can own lifetime guaranteed income, inflation protected income streams that will actually grow as the cost of living goes up. We can own real estate assets that are inflationary. So if you own real estate, you're experiencing real estate, you own real estate, it is inflationary. So if you own a hard asset like that, you're going to be on that inflation train.
Sure.
So we want to position assets that way. That I think we've always wanted to do that, but even more so. We want to own dividend stocks. We want to own dividend growth stocks. Companies that are going to grow their dividend over time. So you have to really hyper focus on this stuff and build a plan that's going to deal with protecting capital, giving you the cash flow that you need, having increasing income, and that's a tall order. And unless you have expertise and you're focused on that, and something that you've done as an advisor, I think it's a little overwhelming as a layperson. And most firms just don't. It's just too much to tackle. Yeah. But it's just too important because retirement is about income.
Absolutely.
And we have to protect the purchasing power of that income. And I think that's the next challenge, for the retirees right now. And you better have a plan to deal with that.
Absolutely. And David, let's talk about the different components that your office helps to cover, because we've talked about this in prior shows, but I'd like you to tell the viewers exactly what you do and the different pieces and parts.
Yeah, so we're a full-service firm, so we're looking at everything. Again, my partner's a CPA. We have our own estate plan attorney. One of my clients actually she's a Medicare supplement plan expert. So everything, I only have so much brain power, and it's done, right? Yeah. It's used up on a daily basis. So I have people around me that are a lot smarter than I am in a lot of areas. But to have a real plan, you have to have an integrated plan. We have a saying as well as not only does your plan have to be implemented, it has to be integrated. We have to look at taxes, we have to look at estate planning, we have to look at long-term care, Medicare, all those kind of things. And that, again, it's a lot of stuff. And that's why it's so fun to do what I do, because we get to help clients at a level that it's just hard to get. It's like being a general practitioner, except having all these specialists, at your fingertips, because you need it. There's only so many things I as a single advisor can do, but as a team, it's a lot more. It's a lot more fun because I don't have to rely on myself, for all this stuff. I mean, Medicare a long time ago was okay. Supplement plans, I'm not doing that. Yeah. So thank God I had a client of mine that she wanted to do that as her kind of second career. she's in her 70s, but she loves it. But it's something for her to do, and she's great at it. She's brilliant. Went to USC. She's smart as heck, and we're blessed to have her. But those are all the things that go into, to doing real planning.
Absolutely.
It just takes a lot of effort. It takes a lot of work. And somebody the biggest advice I give is to clients or prospective clients is just start. Just start looking. Just start with somebody to look at what you have. Even if you've done a great job, maybe there's things you're missing. And sometimes I'm just pointing things out to clients at a minimum, but hoping to help people on a bigger basis. So it's fun.
Absolutely.
It seems like a lot of work, but it's just, again, it's a labor of love, I call it. It's something that's something that you. The fun part about my job is it's a never-ending story.
Absolutely.
There's always more to know.
It just keeps going.
Yeah,
and continuing.
thank God for me.
Absolutely.
Job security.
Well, David, we're about ready to open up the phone lines for the second time this week. Can you tell the viewers what they can expect to receive? I think we have 5 spots left.
Oh, good. So, what we're doing now, same thing I do with my radio show every Sunday. We're doing for the top first 10 callers, you have $500,000 and above. We will do a complimentary second opinion for you. We'll give you a complimentary what's called retirement blueprint. We'll review what you get for that is we'll give you a report on the risk in your portfolio, the fees that you're paying. Most of you are overpaying in fees. We'll do a full tax projection and tax analysis on your tax return. We have our own in-house estate plan attorney. We'll review a trust or sit down with you if you may need a trust. So again, the first 10 callers that want to call, it's 866-739-3775, 866-REYES-PLAN. Or you can go to our website as well, which is reyesplan.com. And again, I'd love to talk with you.
David, thank you so much. To the viewers at home, the phone lines are once again now open. That number to call is 866-739-3775. David is offering you a complimentary retirement review. All you have to do is pick up the phone. We have 5 spots left. Again, the number is 866-739-3775. We'll be right back after this very short commercial break.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to The Retirement Architect. My name is Cynthia Defazio, and I'm joined today by David Reyes. And David is the founder and chief financial architect of Reyes Financial Architecture. Another great show this week, David. I just wanted to ask you a question. What is the most important piece of advice that you can give someone who's in the viewing audience today, perhaps 10 to 20 years away from retirement?
10 to 20 years. I don't know anybody like that. I'm too old. No, that's 10 to 20 years. How about 10 years would be good, right? We'll start there. 10 years, you're doing great. If you're just thinking about doing planning at 10 years, you're way ahead of the game. Most clients are saying, I want to retire next year, or I'm retired and I want to have a plan. The majority of people are just about to retire or already retired and now they want to have a plan. So if you're 10 years out, you're doing good. Go get some advice. I think the critical window, 10 years is definitely the best because you can look at I don't like debt. It's one of the kind of the 3-legged stool: maximize Social Security, debt, and cash flow from investments. So if we can maximize our Social Security benefits, do that proactively. If we can eliminate debt, I started in the banking business many moons ago, even though I've done this for 25 years. That was my first career. So dealing a lot with real estate finance and real estate, I don't like to have debt in retirement. And so 10 years out, even if I do a 15-year loan, let's say 10 years out, and I retire at 65, at 70, if I'm debt free, that's a huge raise.
Sure.
So I'm very aggressive with clients that want to retire early, that are at least I would say 10 years out and further, really 10 years out is a good number, is focusing on really becoming debt-free.
Okay.
That's probably it's like a guaranteed lifetime income annuity is the way I look at it, right?
Yeah.
And you never have to worry about, plus you have inflation protection because you have your house hopefully growing in value in San Diego. But get a plan, get a written plan, get an income plan.
Okay.
Because it's all about cash flow. So what we need to do is figure out what do we have today, what are we going to have tomorrow, and how can I make sure that I maximize that cash flow, how I can position my assets for the best cash flow and risk mitigation and taxation, and reach out to somebody who does comprehensive retirement income planning.
Okay.
And believe it or not, there's just not a lot of advisors, I believe, that do a great job of that. There are in San Diego, but there's just not a lot.
Okay.
Most are just looking at managing investments. And that's not, again, an investment plan is not a retirement income plan.
So more of the accumulation years versus distribution.
Yeah, 10 years you have to start looking at cash flow.
Yeah.
20 years out, I mean, you're still in a growth mode. You know, I don't think income plan at that point in time is that important.
Yeah.
But most clients that are coming to me are about to retire within 5 years or already are retired and they just want to improve upon what they have. So it's never too late.
Okay.
It's never too late to get a second opinion, to talk about what you have, get a second set of eyes at a minimum. I always promise clients, if I sit down with you, you're at least going to learn things you had no idea that were possible, at a minimum. And if you're going to spend the time, I'll spend the time.
Absolutely.
Right? If you're willing to spend that time, I'll spend that time. So it's fun. It's fun to meet people. It's fun to everybody's interesting, right? We all have stories,
Everyone
right?
has a story.
It's fun.
Absolutely.
I think when you embrace that, it makes my job a lot more fun and enjoyable. So it's something that I just encourage anybody who's looking to retire or they want to improve upon what they have. I think there's possibility to just reach out and talk with somebody that does have expertise in the retirement planning, retirement income planning arena.
Okay. Let me ask you a question, David. If someone in the viewing audience today is obviously watching with their husband and wife, how important is it to actually come in together as a couple?
Extremely.
Okay.
Extremely. And I always tease, there's always one person that deals with the finances, so if you can't drag both of you in, at least one of you come in to start.
Right.
But eventually we'll want to sit down with both of you, and it's important. And I always say, the spouse that's not involved with the finances is actually more important than the spouse that is, because what if something happens? And it's usually the man, not being sexist, I don't care, my wife deals with all the money, so I'm not at all. You deal with it. But the fact is, if something happens to that spouse, do you have a plan that's already in place to deal with that? When somebody passes, there's a lot of stress. Last thing you want is financial stress.
Sure.
So definitely we want to have both spouses involved at some level. They don't have to be what investments do we pick, all that. What's the outcome? How much money do we got? Yeah. Right? Are we going to be okay?
Absolutely. Again, it comes down to the need of having a really good written retirement income plan. Absolutely. Yes. David, thank you for another fantastic week. I really enjoyed the show so much. To the viewing audience at home, the number to call is 866-739-3775. We look forward to seeing you back next week. Thank you again for spending time with us. Be safe, be happy, be blessed. We'll see you soon. Thank you.